Uh, गुड इवनिंग फ्रेंड्स, टुडे इज मकर संक्रांति। तो सबसे पहले मैं विष्णु तुलसियान जी को बोलूंगा आज के लिए कुछ स्पेशल एड्रेस करने के लिए। रिक्वेस्ट टू विष्णु
Uh,
तुलसियान जी।
Thank you, Chimpuri, for giving me the opportunity to address this Golden Charcha. The objective of Golden Charcha was to create awareness in our Chartered Accountant fraternity, and especially to those who are new and those who didn't get the opportunity to uh, put themselves of their skills in the ERC platforms. So as to create a talent pool in the ERC, and we can portray our chartered accountant across the country. And I am very much thankful to Sneha madam who consented to be here. I met her in the institute and she was very passionate about this activity. So I thought she's the proper selection for this golden charger. The topic is very apt and very useful. I'm also thankful to Chimpu, who is always available at and he's call away. Whenever I need his help, he's always available. In whatever capacity he can do, he does 100%. I just want to invite you all in the Amma Tujhe Salam initiatives, which is to be held on 23rd January in GD Bila Sabaga, and request not to miss it because this is the single program I am doing in this my tenure, which is for the nation and not only for the profession. If nation survives, we will survive. If the society survives, we will survive. What contribution we do in the society is very apt, and we must portray it. So please come with your friends, circles, with your family, with your any other colleagues. This is open for everyone, and popularize this one to each and every people you like. We're also distributing one book written by Mr. Dhillon, the Lieutenant General of Siachen War, on this particular event. So this is very important book, and I wish these books will be kept in the library of everyone. So this is what we have expected from you. With these remarks, over to organizer and coordinator Chimpu Jagal.
Vishnu Tulsian ji, and it is great initiative by EIRC Golden Charcha in enriching webinar series by EIRC of ICAI on every Monday, Wednesday, and Friday. Today is the 57th session of the Golden Charcha. Today's speaker is Sneha Gupta. Topic is future of investment in metal, commodities, vice and versa, gold, silver, copper, etc. Key highlights of the today's topic: global demand growth and supply demand dynamic, current scenario in Indian market, portfolio diversification and risk reduction, way to invest in metals. Today's speaker Sneha Gupta. Today's speaker Sneha Gupta is a second finance professional with over 12 years of experience across corporate finance, controllership, taxation, and regulatory compliance. She is currently working as a senior finance marketing at BK Group Products Private Limited, Kolkata, where she oversees end-to-end bookkeeping, audit, closure, direct and indirect taxation, and company law related matters. Sneha is a distinguished chartered accountant having cleared all level in the first attempt with a single digit rank and is a national rank holder, All India 7th rank in CA final November 2013, All India 4th rank in CA IPCC and All India 6th rank in CA CPT. She previously worked with Wipro Limited based out of Delhi in the business finance and controllership function, gaining strong exposure to large-scale corporate finance operation and robust governing framework. और ज्यादा टाइम नहीं लेना, टुडे इज द ऑलरेडी वी लेट, सो आई रिक्वेस्ट नेहा जी टू स्टार्ट आवर सेशन. ओवर टू नेहा जी.
Good evening, everyone. Thank you, Chimpuji, for the generous introduction. I'm humbled and grateful today. I sincerely thank EIRC for giving me this opportunity to speak at this forum. Special thanks to CA Vishnu Tursianji for bringing up this platform for learning. It is a pleasure today to be a speaker here and part of the platform. I wish you all a very happy Makar Sankranti for those celebrating today or tomorrow. So today I'll be speaking about commodity market with special focus on trading in metals such as gold, silver. I will also briefly touch upon copper, which is comparatively new area of interest for retail investors in India. Previously, we did not know much about investing in copper, but since the demand has grown, copper is attracting interest for retail investors. So we will talk a little about copper as well. I hope this session brings you better clarity and practical understanding of metal trading in commodities market. We will talk about all of them today one by one. So today all three of them, gold, copper, silver, are trading at all-time highs. So we will first start with the shiniest one, gold, which is everyone's favorite. I have a PPT and I would share it with everyone. The screen is visible to everyone.
Yes, yes, it is visible.
Yes, sir, visible.
Yeah, okay. So we'll start with gold, which is everyone's favorite. So it's not proven, but as per the data available, Indian women own at least 11% of the total gold ever mined, primarily as jewelry for cultural significance and financial security, exceeding the reserves of many nations, the entire reserves of many nations, including United States. Just imagine 11% of the entire gold ever mined is held by Indian women alone. So this wealth has been passed down through generations. It serves as a financial asset to them and holds religious importance, significance, their status symbol, whatever you call it. So gold held the test of time even during turbulence, even during times where the entire markets crashed, like the 2008 financial crisis. Gold still held its position. Even the stock markets crumbled, gold held its ground and even appreciated. It acted as a buffer for investors. Even during the COVID pandemic, the market crashed, but gold held its position. It even rose and gave investors a position of safety. So, gold in itself means safety, reliability, peace of mind for the investors. So, gold, silver, copper are significant commodities in Indian market, actively traded on MCX, that is the Multi Commodity Exchange. They are key components of metal commodity group and popular amongst investors for various reasons. Today, all the three metals are trading at all-time highs. It provides unique opportunities for investors, but yes, times are scary as well because you do not know whether to enter the market or not because all three metals are trading at all-time highs. So, why is gold important as an investment? It's a safe haven asset. Even during unstable times, market volatility, geopolitical tension, national emergencies, gold will hold its ground. Today, with the accession of Venezuela, the issues going on with Iraq, Iran, with China, the suppose the pending accession of Greenland and the tariff policies that the US president is coming up with, gold is still holding its ground and it's reaching new highs because investors are going towards gold. It's a safe haven because they know that it will not crash. That is why the demand is increasing and hence the prices are increasing. Even during inflation, unlike paper currencies that lose purchasing power, gold maintains its value over the long term, protecting against inflation and currency devaluation. Physical gold is not anyone's liability. There is no middleman, there is no contractual obligation. If you're holding it physically in form of jewelry or a bar, a bullion, or even paper gold, it's not a liability for someone. Its low correlation to stocks and bonds, gold spreads risks, reduces volatility, and balances potential losses in other investments. So, Even for your retirement portfolio planning, gold is a very valuable asset. It acts as a hedge against inflation and currency devaluation. It may not provide regular income like other assets, other investments. Last year, it rose around 40%, 45%. This year, again, it's reaching new highs. But this will stop one day. It will not continue the way that, okay, you cannot imagine that every year it would increase by 40%, 50%. It would not, it would obviously not. And it is actually not supposed to be. But it would provide stability. It might not give returns more than 5%, 7%, or whatever that may be. Some other portfolio, some other mutual funds, or some other fund houses might be guaranteeing you. But it offers stability and liquidity when you need it. So, diversifying your retirement portfolio with gold can help protect your savings from economic uncertainties. So, gold is more than just a metal, it is a timeless investment that has stood the test of time. You would have heard stories from your elders, from your grandparents, that they bought a piece of jewelry or a bullion or a bar at this rate, which is unimaginable at present scenario. So today the prices might be 20 times, 30 times the price of what they might have bought it at. This is how gold has emerged as a safe investment. So, various investment options, it makes a solid choice for both novice and experienced investors. Even if you're new, gold is a safe option. So, at least a part of your portfolio should have gold in it in any form. You can have it even as a mutual fund, you can have it as an ETF, you can have futures, you can deal in futures if you are known to derivatives future trading, but that is not for beginners. But yes, even for beginners there are forms in which you can deal in gold and hold it as an asset in your investment plan. Okay, so we'll get back to gold after some time, and then we'll talk about silver now. So silver has shown more than gold last year. Even current year, silver is rallying. It's at all-time high. The gold to silver ratio has not been this ever. It has become valuable in both domestic and international markets as it's commonly used in several industries and is crucial for emerging sectors like electric vehicles, 5G technology, solar energy, artificial intelligence infrastructure. So even if alternatives are being developed, it would take at least a few years to replace it. So why has silver risen so much last year? So the supply demand deficit is creating scarcity. The supply is the same, but the demand has increased threefold. It's being used in electrical vehicles, infrastructure for artificial intelligence, and the demand is not going anywhere. The demand would stay, but the supply is limited. If you go to find a new mine, it will take at least 6 to 7 years for the mine to become operational. And silver in itself cannot be mined. Silver is actually a byproduct of how we it's actually a byproduct. When you go to mine some other metal, you find silver as a byproduct. It's not that you find a mine full of silver and you extract silver out of it. Maybe you go mining for some other metal, and as a byproduct maybe 10%, 15% of it comes out as silver. So that is why the extraction process is not simple. The extraction process is complicated. The supply would always be limited, but the demand is increasing. It's increasing day by day, and the supply is not able to meet it, and hence the rally. And hence the rally. Today, silver was trading at around 275 or 280 in the spot market, and that too maybe on paper. If you go to actually buy silver in the market, you will not get it. You will get it only if you're ready to pay a premium of 10 to 15%. Otherwise you're not even getting it at that rate. Imagine silver was around 180, 190 at year end, and now within 15 days, today is 14th of January, within 15 days it's reaching to 70 to 80. That too, no availability in the market. I'm not talking about the jewelry. The jewelry sector in silver is hardly 15% of the actual silver demand. It's majorly the commercial aspect that has taken over the silver demand. Again, the geopolitical tensions and trade war. I talked about the situation with Iran, Venezuela, and Greenland. then China coming in, then the US tariffs. The president again has talked about 500% extra tariff on Indian exports. This again would have an impact on the market sentiments, and market these days is running on sentiments. Along with the demand and supply issue, the sentiments are impacting the market and hence the rally. Gold and silver are increasing like crazy, along with copper, which we would come back at a later stage. So overall market volatility is driving the safe haven demand. So everyone is looking for safety. I also look for safety. You might also be looking for safety because currently the market is crashing. For the last 6-7 days, the market has crashed around 7 to 8%. So gold and silver have risen crazily. And today we are not actually sure whether it's time to enter the market or exit it, or even whether to hold it or not, whatever you are holding. So let's talk more about silver. So before we understand what's happening with silver, there have been two crashes in silver prices in 2008 and 2011 again. In 1980 and 2011, sorry. So we have to understand what happened then and what is different this time, or maybe is it the same situation and another crash is coming up. So there were two crashes as I talked about in 1980 and 2011, and 2026 is comparatively different. So on 29th of December 2025, silver hit $86 an ounce on COMEX, that is the commodity exchange. That was an all-time high then. In spot market, it was around 2,70,000 per kg today. Gold again has crossed 4,500 at COMEX and around 1,45,000 per kg INR in Indian market today, spot market. So it was the best year for both these metals since 1979. Then around 2nd of January, a crash happened. It was silver. Around 8 to 10% of the value crashed in a single day. It was one of the largest drops in more than 5 years. So people thought it was overbought. People are buying silver without any reason, just because the prices were rising, and hence there was a crash. And it's gonna fall more. 8 to 10% was just the beginning. But then it again became stable and it again started rising. Some say it was intervention by exchanges. So we have to talk about the history now because this is the third time in 45 years that silver has exploded to such astronomical levels. It might end the exact same way like it did some 40 years back, like in 1980 and 2011. So that time exchanges intervened, they changed the rules, they changed the margin requirements, and the prices collapsed like a house of cards. So there were three peaks. There were interventions by the exchanges and then brutal crashes. People's entire life savings got wiped out. So the pattern says you should also exit today also. As per the pattern in 1980 and 2011, the moment it hit the peak, a crash happened. So even today, your mind would be saying, okay, let's exit the market. But you have to understand what's the fundamental behind it. Okay. So the first one in 1980 was a billionaire's plan. It was a monopoly market. He planned a scheme and then a crash happened. 2011 was a speculation bubble which exploded. And this time it's actual shortage which is driving the prices. So you have to understand what might be the difference between 1980, 2011 and 2025-26. So you can prepare yourself for the trade of the decade. So for it to be called a market mania, you can have to check the criteria. If it is a rapid price acceleration, explosive price movements driven by high leverage and a speculative positioning rather than underlying supply demand fundamentals. So that is what is happening. The feedback loops, self reinforcing cycles where rising prices attract media attention, which is happening right now, drawing capital inflows that push prices even higher. There are inflows and prices are rising every day, every day. We might not have seen physically what happened in 1980, but the situation was exactly the same. If you go through history, it was exactly the same in all the three situations. The warning signs are there. There is a media frenzy, margin debt, price movements completely decoupled from fundamental supply demand metrics. You actually don't know what is happening, whether it is the market sentiments, whether it is actually the demand, or exactly what is happening, because every day the prices are increasing by 4%, 5%, and it's actually going crazy. Okay, so we'll talk about 1980. 1980, there were two brothers, the Billionaire brothers, Hunt brothers. They tried to capture the entire market. They wanted to own all the silver that was present on earth. This was their strategy. They systematically attempted to corner the silver market through massive leveraged positions and concentrated buying. So they wanted all of the silver. In actually, they had one third of the silver which was not owned by the government. One third of the entire silver on the planet which was not owned by the government, and that is huge. They did not buy it physically, they started trading it in futures. That time, there was a time when silver was trading at $6 in 1979. In January 1980, because of the doings of Hunt brother, silver was trading at $49. That is a 700% gain in 1 year. 1980, 700% in 1 year, silver rose by 700%. Then markets intervened. Their strategy was working only because of the leverage. They were not buying with cash. They were using future contracts with massive margin. The system reinforced itself. The regulators stepped in. They increased the margin requirements. The Federal Reserve raised the interest rates by almost 20%. And this combination destroyed the Hunt brothers' strategy. And silver collapsed. In a single session, it collapsed from $21 to $10. The Hunt brothers went bankrupt. By 1982, the silver was again trading at 4.90. That is 90% below the peak. The crash was 90%. So 1979, $5, 1980, $79, and 1970, 1982, again back to $5 because the baseline was the same. The rise, the hype was only because of the speculation, the manipulation by Hunt brothers. So the hike and fall in 1980 was simple. It was speculation. There was no shortage. There was no surge in demand, no increase in demand. The warehouses were the same. The inventories were intact and the people suffered. Imagine someone investing their life savings in silver and facing a fall of 90%. It's huge. So 2011, again, 2011 was little different from this, but the crash happened here as well. 2011, silver rose from $8.5 in 2008 to nearly $50, 6 times the rate. This time, it was zero interest rates, quantitative easing, currency fears, and the rise of silver ETFs. So investors were first time getting the taste of ETFs. So exchange traded funds, in that you can trade the metal commodities on the exchanges having a demat account. So retail investors were for the first time able to get a hold of silver without actually holding it physically. And everyone was convinced that hyperinflation was coming. And again, a loop began. The prices started rising. Started rising every day, the way it is happening now. Silver again was overbought. Silver gained almost 50% in 4 months. But physical inventories were stable. The inventories were intact. The warehouses were full. The demand was also stable. The demand was rising, but not exponentially. The demand was stable. The industrial demand did not explode. So this was all going on only on paper. It was all going on only on paper. And then again, the exchanges intervened. The margin requirements were raised 5 times in 9 days. The leverage collapsed. Silver fell again almost 50% within weeks. It went from $49 to $26. By 2015, it was trading below $14 at COMEX, the commodity exchange. Again, it was clear. It went back to the baseline. The rates post the hype was cleared, they went back to the baseline. It was pure speculation. There was no shortage. The inventories were intact. And as soon as the leverage disappeared, the prices again went back to the baseline. So, again, a crash. The investments wiped out. So, 2026 now. We know what is happening in 2026. The prices are running crazy. So 2026, let's see what is different in 2026. Here there are structural supply constraints. Mining projects face 7 to 10 years development timelines, permitting bottlenecks and declining ore grades. New supplies simply cannot quickly enough to meet the demand. I told you, you cannot go and start mining, you cannot go and start digging a mine. Silver is actually a byproduct. You cannot mine silver directly. You will go to find some other metal, you will mine for that metal, and you will get some silver out of it as a byproduct. Maybe 20%, maybe 15%. And to get a mine operational, it takes at least 5 to 7 years. So the supply is not increasing very soon. And if we talk about an alternative, I don't think there is any alternative at present. To find an alternative, the scientists would again take a few years, maybe 5, 7, 10 years to find an alternative. So the demand is not going anywhere. The supply is limited. The industrial demand explosion is there. Solar panel, electrical vehicles, AI infrastructure, they all represent 60% of annual demand. The jewelry sector hardly takes 15 to 20% of silver, which we actually see in front of us. But what is going on behind the scenes is that the industrial usage has increased because today we are focusing more on artificial intelligence. So the infrastructure needs silver. Solar panels, again, the usage would increase with us cutting down on other forms of energy and focusing more on sustainable energy. Solar panels would increase. Electrical vehicles, again, India, the entire world has planned to replace all the vehicles. At least 30% of the world's vehicles would be replaced by electrical vehicles by 2030. At least 30% of the entire vehicles on earth would be replaced by 2030 through electrical vehicles, and that would require silver in it till there is an alternative found. And finding an alternative is not easy, it's not a simple process. Then again, what is the alternative, at what rate can you find an alternative, and what is the supply, what is the actual availability of the alternative is also a question. Because silver, right now we see silver in front of us, but we do not know what is an alternative. And silver, again, I told you, is not available at the rate which we see on the screen in front of us. You might find that it is available at a rate today, the spot rate is 270, 280, 290, whatever. You go to the market, you will not find it. You will not get it at that rate. You have to pay a premium. So you have to consider everything when you check the supply and demand metrics. The mineral status, government worldwide classified mineral as silver as a critical mineral, recognizing its strategic importance for energy transition and technological advancement. So the physical scarcity we talked about, the inventories are declining. Exchange monitored warehouses stocks have fallen to multi-year lows, with COMEX inventories down 35% from its peak because the metal is withdrawn for industrial use. Delivery schedules for large industrial orders have stretched from weeks to months. You go place an order, you'll not get it right now. You have to wait for months. The production would not wait, so they are ready to pay a premium, indicating the supply chain stress rather than temporary disruption. This is not temporary, this is going to stay. The premiums have risen. Physical silver premium over spot prices have surged to 15 to 20%, reflecting the growing disconnect between paper market and physical availability. Told you, you're not going to get it. You're not going to get the silver at the rate which is shown on paper. The substitution pressure, industries are actively searching alternatives to silver in applications where possible, but it would take time. A clear signal that prices are impacting the demand destruction. You will find a substitute, you will find an alternative, but it will take time. It will take time to settle, and that too might be a hit and trial. You might be able to replace it, you might not be able to replace it, but the demand is going to stay, the demand is going to increase. This is something unprecedented. So, can you actually compare 2026 with 1980 and 2011? Maybe, maybe not. Because this time it's actual demand, it's actually a crisis situation in terms of supply. Silver supply is structurally inelastic. 75% of the production is actually a byproduct of the other metal. So, and it cannot be substituted. So it's actually speculation and real shortage at the same time. People are buying, some people are buying because others are buying. Industrial usage is there. They are buying because they want to use it in their EVs or AI infrastructure or wherever. There are retail investors who are buying only because others are buying. It is there, the speculation is there, the bubble is there, but it's backed up by actual demand and shortage of supply. So this is the difference this time in 2026. So analytical framework for silver peaks. The inventory trends, you have to check what is happening, whether this is actually a speculative bubble or this is actual demand. The physical availability is the ultimate reality check on pricing. You have to check whether it is actually physically available and what is the reality. Is it only on paper or whether physical inventory is available? The policy and regulation, what actions are regulators and central banks taking? Margin charges and monetary policy shifts can trigger rapid reversals. In 2011 as well as 1980, the exchanges stepped in and they increased the interest rates. They took away the leverage the people had, the market had, and hence the crash happened. This time, it is backed up by strong industrial demand. Is consumption growing organically from technological needs, or is investment demand driving the rally? Is it just the demand? Just the demand because everyone else is buying. We are also going with the crowd. Everyone is buying, so I'll also buy. So is it that, or is it actually needed? Is it actually going for consumption, or whether people are buying because in 1980 they were buying without any reason. In 2011 again they were buying on paper without any reason. But this time this is actually going to industrial usage. This is not going anywhere else. So, what proportion of positions are leveraged? High leverage amplifies both gains and inevitable corrections. If there is just leverage, there can be corrections. The corrections are happening here as well. I told you on 1st of January or 2nd of January when the market opened, there was a crash for a couple of days. It crashed by almost 10%, but then it again stabilized because it was backed up by the demand. The demand would stay, the supply is short, and hence the balance again happened, and they started the prices started rising again. It did not get back. The crash stopped. It was not actually a crash. You can call it a correction, and it again started rising. So here we are comparing the three peaks. 1980, the inventories were stable. 2011 again, the inventories were stable. 2026, the inventories are declining. The actual supply is not there. You cannot find actual silver in the market. It's not on paper, but physically it's not available. The warehouses are empty. You have to pay a premium to buy the silver. The policy driver in 1980 was manipulation. The Hunt brothers manipulated the market. They wanted to own the entire silver stock, and hence this was the driving policy behind the 1980 peak. The 2011 peak was due to the quantitative easing narrative and people's interest, growing interest in the ETFs, the newly introduced ETFs in 2009, 2010, the ETFs were introduced and people started taking interest in it. 2026, it's actually a supply deficit. The industrial demand in 1980 was flat, hardly. Whatever the situation might be in 1980, the demand was stable. It was not rising. It was not that something new has come up, that silver that requires introduction of silver in their process. The demand was flat. The same thing was there in 2011 as well. The demand was flat. It was modest. It was not rising. In 2026, artificial intelligence, electrical vehicles have come up and they are taking over the entire silver supply because these are rising sectors. They were not present in 2011. Maybe the EV was coming up, but artificial intelligence was not there. It came up, it's very new, and 25, 26 has been the building block for it, and it will not stop. So, what can we call it? 1980 was pure mania. It was pure mania only because of manipulation by the Hunt brothers. 2011 again, it was mania. It was nothing but mania. 2026 is not mania. This is actual scarcity backed up by industrial demand, supply deficit, and the falling inventories. So, can you see the difference between 1980, 2011, and 2026? The fundamentals are different. So the supply demand imbalance is a very important indicator when you want to actually know why is silver rising. It's rising every day. And why is it rising? Because of the real shortage. Speculation is there, no doubt. Speculation is there in the market. But even if the speculation is taken away, even if the stock exchanges intervene, even if things happen the way it happened in 1980 and 2011, the baseline has changed this time. 1980 and 2011, the baseline remained the same, and post the crash, the silver prices came back to the baseline, whatever they were before the peak. But this time, the baseline itself has risen. People have started using it in a different way. The baseline has increased threefolds, and even if a correction happens, I'm not calling it a crash this time because as of now, we are not able to speculate, we are not able to think about a crash. Yes, corrections would happen. Corrections are a part of the process, and that is a part of the metal market, be it gold, silver, copper, anything. And that would keep on happening. But the crash that happened in 1980 and 2011 might not happen this time. This situation is different, but because of the speculation, you have to be careful. This time it's speculation plus the scarcity. Okay. So you have to track the inventory data. Actually, what's happening with the warehouse, the physical premium, whether if you go and actually track the market, you would be able to know what the premium is, how much premium do you have to pay. They are real time indicators. If you have to pay a premium to buy silver, that means the actual stock is not there in the market. Suppose you go and you have to, suppose you want to buy a bar of gold today. You will be able to buy it at the rate which is reflected on the websites, on maybe on Google. But if you go to buy a bar of silver, you will not get it at that rate. So you can track that way whether it's actually available, whether you have to pay a premium to acquire it. So the mining pipeline, if any new capital expenditure has been announced, Samsung has already taken over a mine in Mexico, and they have claimed their ownership for 2 years over it. So no one else can mine in it. So you have to be aware, you have to keep track of these announcements. So then you will get to know what's actually happening with silver, how much it is in demand, whether actual demand is there or whether this is again a speculation like 1980 or 2011. Industrial consumption, the solar installation rates and electronics production, they drive the structural demand, and along with AI infrastructure. They're not going anywhere, they will only increase. So the implication is that expected continued volatility would be there, but 1980 and 2011 were different. Now the fundamentals have changed. The rally has structural support. The question is not if supply constraints matter, but it is how long would it persist. It's rallying, but it will also end someday. Not today, maybe tomorrow, maybe after 10 days, 15 days, 1 month, 2 months, 3 months, but this will end because the market would reach an equilibrium. Today or tomorrow, it has to reach an equilibrium where the supply and demand would match, and we are all waiting for that day. Till then, you have to monitor these three factors to know where it is going. Right. So we'll get back to silver again. Now we'll talk a little about copper. 551 already. So copper is often called Dr. Copper in your portfolio. It is called Dr. Copper by economists and market analysts. It has earned its nickname through global economic health. So, because of its reliable reflect worldwide economic activity, making it a strategic investment opportunity for Indian investors looking to diversify their portfolios beyond traditional assets. So, this is comparatively a new territory for Indian retail investors. And that is why it has come up very recently, and people have started showing their interest in copper. Again, copper is used in electrical vehicles. EVs require 3 to 4 times more copper than traditional vehicles, with demand accelerating as India targets 30% EV penetration by 2030. So, we want to replace all our automobiles by EV vehicles by 2030. At least 30% of it would be replaced. That is the target. And EVs require copper 3 to 4 times more than the normal vehicles. The solar panels, wind turbines, and modern electric grids rely heavily on copper wiring. Again, the sustainable energy that we were talking about in silver is in use here as well. Copper is also used in solar panels, the wind turbines, and other forms of sustainable energy that we are focusing on right now. The supply constraint challenges here as well. A new mine requires 7 to 10 years to develop and commission. It also creates a structural demand supply imbalance. The global infrastructure boom, data centers, railways, telecommunications, and urban development requires copper consumption. The infrastructure would improve, and hence the demand for copper would also increase on a daily basis. So we can see some similarities between silver and copper here. Because of the increasing industrial usage, the supply constraints are happening and hence the price rally. All are at their all-time peaks. So we need to understand, since it's a new commodity for us to trade in, we have to understand how do we trade for it. So you can trade copper futures on MCX. You need to be experienced with derivatives with future market, and then it would be easy for you to trade on MCX. You can trade commodity futures for copper. It requires understanding of leverage, margin requirements, and contract specifications. It would require significant capital contribution, mark to market settlement. Of course, it would bring in high volatility and leverage risk. It is suitable only for short to medium term trading. So first way of trading in copper is trading on MCX in terms of copper futures. Second, if you want to directly deal with copper, you can invest in some stocks through your demat. Hindustan Copper Limited is currently the only vertically integrated copper producer. It owns almost all operating copper ore mining leases in the country. So this is the only company which is purely owning the domestic copper production. So Hindustan Copper Limited is the most directly linked share you would find with copper prices in India at present. Apart from that, there are some industries like Vedanta Limited and Hindalco Industries. They are not directly linked with copper, but yes, a part of their production, a part of their business segment is represented by copper. So Vedanta Limited has zinc, oil, gas, aluminium as its business segments, and a part of it is copper. So it's not directly linked like Hindustan Copper Limited, but yes, a part of it is also linked to copper. Same with Hindalco Industries. It has copper productions alongside its aluminium business. So these stocks again carry the risks, management decisions, regulatory challenges, and other business factors that can significantly impact the returns independent of the copper prices. They do not provide pure copper price exposure. The companies might be having other risks, other issues apart from rising copper prices. So it does not mean that if copper prices are rising every day, that means these stocks would also rise. They are directly connected. Hindustan Copper is actually the most directly connected, but that does not mean that rise in price of copper would mean rise in price of the share prices and vice versa. It has its own operational risks and requires the your own speculation. So third one is international copper ETFs and mutual funds. Right now, India does not have any ETF or a mutual fund which is dedicated entirely towards copper. You have to go to the US exchange, like the Global Copper Mines ETF or the US Copper Index Fund. So these are ETFs and mutual funds which are available on US exchange, and you can deal in them if you want. You can, along with the restrictions imposed by RBI and following the rules, you have the opportunity to invest in copper ETFs and mutual fund. These are directly related to the prices of copper, but again, these are not Indian funds which you can monitor the way we monitor the Sensex or Nifty here. You have to follow the annual limit of 250,000 USD per financial year for all overseas investment and expenses combined. You have to follow the RBI guidelines. You have to choose if you want to do an ETF or a copper index fund. This is the third method you can deal in copper. So you have to understand what are the risks which are attached to copper: the price volatility, the economic slowdowns, the currency exchange risks, and China dependency. So, 50% of the global copper production is held by China. So, China's economic performance, policy changes, real estate sector health have an impact on copper prices. So, you have to keep a track on it because 50% is not less. It's like China would advance and copper would also advance. The exchange risk, because in case you are dealing at international market, in case you are dealing in the US exchanges, the ETFs or the mutual fund, you have to keep in mind the INR and USD exchange rate fluctuations as well, because that would also come in play. Currency appreciation and depreciation would impact your gains and losses. The economic slowdowns, in case since copper is widely used in infrastructure and manufacturing construction projects, so in case of economic slowdown, these infrastructure gains and manufacturing would stop, would actually lessen a bit, and hence the volatility in copper would continue. So you have to keep in mind these factors when you think of investing in copper. So we'll think about copper offers other industrial exposures. Many Indian investors also consider precious metals like copper and silver for portfolio diversification. Understanding the complete landscape of metal investment helps you make informed allocation decisions. Of course, you have to choose where do you want to invest. Gold, silver, copper, these are actually not the only options, but yes, gold and silver were always prevalent. Copper is relatively new. We have aluminium coming up, we have zinc coming up, we have platinum as well. So you have to understand all the scenarios, all the exposure related risks, and so that you can choose the best option if you want to actually invest in any metal commodity. Each metal has distinct characteristics, like gold, silver, copper. They have their own advantages and disadvantages. They have their own substitutes, alternatives, whatever you call it. But portfolio diversification, if you're thinking about, you have to think of metals in it. At least some portion of your portfolio should have metals in it. Metals, you have to choose which one do you want. Either gold, silver, they are comparatively easier to trade in. Copper, again, even if we do not have direct exposure to copper, uh, copper ETFs or mutual funds, but yes, I showed you the ways in which you can invest in copper as well. So we'll talk about how can you hold these metals. You can either it's almost 6 now, so I'll rush. So you can hold copper, you can hold gold and silver physically in forms of jewelry, bars, coins, whatever forms. It can provide psychological comfort, but then again, the risk of security, the risk of keeping it in your house or maybe your vault would be along with it. So even if you buy jewelry, you have to pay the making charges. That would be a sunk cost for you. Sovereign gold bonds was an option, but since 2023, RBI has stopped issuing sovereign gold bonds. So that option is out of equation right now. But yes, if you're holding it, the ones which were issued prior to 2023, I think you are up for very high gain. Right now, this option is not there till they issue something else. You can
स्नेहा
hold.
जी, इंटरप्ट कर रहा हूँ।
Yes,
अपना और कितना मोटामोटी चाहिए अपने को?
I'll take 5 minutes, 5 minutes and wrap up.
Yes, okay.
5 minutes only. Okay. Okay, you can read. You can deal in ETFs. ETFs can be traded on exchange. You have to pay. You have to pay the brokerage charges. So whenever you buy or sell, you have to pay the brokerage charges only once for the ETFs. If you go for mutual funds, that is the fund of fund, you have to pay the expense ratio. It might be a little higher than the brokerage charges you pay, but then you will have an added advantage of fund houses, the fund managers who are actually managing the fund. So again, another option is digital gold and silver, which has come up recently, maybe in the last 3 to 4 years. You can buy it any fraction, maybe even 1 rupee. So you can buy it through banks or the fund houses. So problem is that it's not regulated right now. It's not regulated the way other funds or the ETFs are. So digital gold is also an option. So you have to understand what do you want to do when you actually want to invest in metals. Holding gold and silver through sovereign gold bonds, ETFs, or physical holdings can balance your safe haven characteristics. The metals have always been a safe haven. It barring silver, I would say gold would not crash. Keep in mind, gold would not crash. You can take it from me; it would not crash. If you want to hold gold, it would should be a part of your portfolio in any form. Silver, you have to be very, very careful with silver because it's the most volatile metal right now. Copper is coming up. It's the copper is a little tricky for us because we cannot deal in ETFs and mutual funds directly. You have to go to the US exchanges, and the options that we have right now is only Hindustan Copper Limited, which might not be a very I mean, it's not a direct way of investing in copper. If you are good with derivatives, futures is a good option to invest in copper. So you have to choose your method, your investment method, the amount of funds you want in your portfolio to keep it diversified in form of metals. So you have to consult your financial advisor to determine the proper allocation of your assets, your financial goals, your investment horizons, and what amount of risk are you ready to take, so that you can have the correct proportion in your portfolio. Okay, I think I'll stop sharing now. Okay. So thank you. It's over 6 now. So I'll hand it over to my organizers to take it forward.
Thank
So
you,
thank you,
Sneha ji.
everyone. Thank you.
Is there any question from participation? If anyone have any question regarding the investment or metal or any specification, आई थिंक स्नेहा जी कोई क्वेश्चन नहीं है पार्टिसिपेशन का।
Okay.
मेरा एक पर्सनल क्वेश्चन था आपसे।
पूछिए।
जैसे अभी मार्केट में रिनाउंड थोड़ा सा ये हो रहा है कि चाइना से कुछ, अभी चाइना तो परचेजिंग कंट्री हो रखा है गोल्ड एंड सिल्वर का, तो ऐसा कुछ है कि जो बूस्ट में ले जाके फिर वो सेल निकालेगा और मार्केट डाउन होगा?
चाइना ने सर अपना एक्सपोर्ट बैन कर दिया है। अराउंड 15 डेज पहले चाइना ने कंप्लीटली बैन कर दिया है अपना एक्सपोर्ट। सो
यस।
उनका जो स्टॉक है उनके पास है। और मतलब मार्केट में र्यूमर्स देखिए, मार्केट सेंटिमेंट्स पर चलता है। अभी
हाँ।
र्यूमर ये भी है कि चाइना सडनली एक दिन दे विल दे विल अपलिफ्ट द रेस्ट्रिक्शंस और अचानक से मार्केट क्रैश करेगा।
हाँ,
तो
वही वही चीज मैं जानना चाहता कि ऐसा कुछ।
देखिए, र्यूमर्स तो फैल ही रहे हैं, बट आपको क्या देखना है कि देखिए मेरे हिसाब से तो बेसलाइन फिक्स हो गई है। वो
क्योंकि
बेसलाइन जो डिमांड है वो वहीं रहेगा, कितने भी रूमर आप
नहीं,
फैला
लेकिन
लो
आज से
वो कहीं
आपको
नहीं
ध्यान
जाएगा।
में होगा 2012-13 में भी ऐसे था कि सिल्वर 1.25 लाख रुपए तक गया था।
मैंने बोला आपको 2011 का मैंने कंपैरिजन करके बताया है पूरा। 2011
हाँ,
और 2026 सिचुएशन इज वेरी डिफरेंट। इट्स वेरी वेरी डिफरेंट। होगा, मतलब करेक्शंस आते रहेंगे मार्केट में, बट दिस टाइम आप सोचोगे कि क्रैश हो रहा है, एटलीस्ट उस
हाँ।
लेवल पर तो नहीं आएगा। क्रैश में भी 1% हो सकता है, बट आप सोचेंगे जिस तरह से 2011 एंड 2000 मे बी 1980 में हुआ था कि अचानक से 90% 80% फॉल, वो नहीं होने वाला। मेरे
मतलब
हिसाब से
जैसा
तो
आप
नहीं होने
बोलना,
वाला।
मतलब आज जैसे आज बाजार अगर 280 का है, 280 है, तो ये करेक्शन 20,000 30,000 रुपये तक मैक्सिमम आएगा।
मैक्सिमम एक बेसलाइन फिक्स हो गई है, वो उसके नीचे
हाँ,
नहीं जाएगा। मेरे हिसाब से तो नहीं जाएगा।
हाँ, हाँ। थैंक यू स्नेहा जी,
वेलकम।
नॉलेज शेयर करने के लिए। और अभी तक कोई क्वेश्चन किसी ने किया नहीं है, तो वी मे कंक्लूड आवर सेशन टुडे। थैंक्स टू EIRC एंड थैंक्स टू स्नेहा जी एंड थैंक्स टू लिसनर पार्टिसिपेशन फॉर बीइंग पेशेंट शेयरिंग। और आज आपने जो बताया डिफरेंट डिफरेंट सेगमेंट ऑफ इन्वेस्टमेंट मेटल पे, एंड उसमें कॉपर काफी आगे आने वाला है, ये मेरा भी प्रोबेबल है कि कॉपर एक आने वाले दिनों में एक अच्छा इन्वेस्टमेंट होगा। बाकी सेल्फ डिसीजन है सबका अपना अपना। थैंक यू, थैंक यू एवरीवन।
थैंक यू।